DeepSeek poses a serious threat to the US stock market. And in this video, I'm going to briefly describe this threat and what it means for US investors. So first of all, what is DeepSeek? DeepSeek is an artificial intelligence, large language model that directly competes with OpenAI's ChatGPT, with Gemini from Google, and with the other large language models that are being developed by the US's big tech companies. Now, DeepSeek has recently released the latest version of its large language model and a technical paper. And the bottom line is that the DeepSeek LLM has comparable performance overall to ChatGPT and the other large language models. In fact, it's actually better than ChatGPT on certain metrics. Now, what's interesting about this is that this model was developed in a very short period of time by a very small team of engineers in China on a very small budget. Now, in the last day or two, I have been alert in listening to various engineers that have been testing this new model by DeepSeek, and they're all extremely impressed. The performance of it is outstanding. And so the question is really whether they were able to achieve this level of performance in such little time and on such a low budget. That's really the big question here. Because if in fact they were able to do this in such little time and on such a low budget, then this is going to revolutionize the whole AI space within the tech industry. The whole business model, the whole revenue model upon which a lot of big US companies have been basing a lot of projects that are based on AI will absolutely come under threat if in fact it's confirmed that this type of performance can be achieved so quickly and at such a low price. Now, there's two really key things to keep in mind here. There's actually quite a few things, but there's really two big issues. The first issue is that this team was able to achieve a level of performance with far, far lower compute power, far less sophisticated computer chips, processing chips. Now, this is an issue that I've been talking to my subscribers about for several weeks now, that I had been tracking the comments of various engineers that have been saying that NVIDIA's chips are actually not needed to do a lot of the tasks that they've previously been thought to. Essentially, what a lot of engineers have discovered is that they can sort of rig a system using very cheap computer chips and reconfiguring how memory interacts with the processors in order to be able to achieve the same type of performance and speed that the large tech players are able to achieve with the NVIDIA chips. And this was a development that I've been tracking for a while, and I've discussed it with some of my subscribers, and that's one of the reasons that I've been pretty cautious about some of the stocks in the AI space. But now it's come out that DeepSeek has been able to achieve extremely competitive performance with OpenAI, Gemini, and the rest, and in fact beat them with a system that costs only 5% as much to run and operate than the systems that the big tech companies are running. So basically a whole infrastructure that's been built by OpenAI, Google, and the rest, that's hundreds of billions of dollars. We're talking hundreds of billions of dollars have been invested. And this Chinese firm was able to essentially replicate what all of them did for, and depends on the estimate, but somewhere between $7 million and $30 million. Now, the other thing that's important is that this particular company has made its entire product open source. And so just about anybody can take this model and use it and improve upon it and don't need to use the products from OpenAI or from Google or from anybody else. And most importantly, they don't need to use NVIDIA chips or the whole sophisticated infrastructure that uses Amazon's cloud services and Google Cloud services and so forth. Now, the other second aspect of this that's very interesting is that this LLM model that they've developed runs on some different principles. In other words, the modeling approach is different and it's actually far more efficient. And so a lot of the efficiencies are actually achieved through essentially a streamlining of the procedures and of the code. Now, both of these developments are really revolutionary because what they suggest is that the big profitability that a lot of people in US markets have been expecting for big US firms that would be providing AI related services and infrastructure, that profitability isn't going to be there. In fact, the founder of DeepSeek has stated publicly that he doesn't think that there's actually any kind of an economic moat that can be sustained by any of the developers of large language models and the infrastructure. He essentially is saying that this is going to be a commodity. It's going to be commoditized and everybody's going to have access to it very cheaply. He basically says that the advantage that one provider of these services is going to have over another will be very minor. It'll be a matter of a few weeks or months, and it'll have to come through a process of just continual innovation. So this is actually the opposite of what investors understand as being an economic moat. You want to invest in companies that have a moat, that basically where you have very limited competition. And so since you have such limited competition, you're able to set the price as high as you need to make a high profit. Essentially what this is saying is that the competition is going to be so extreme and prices are going to therefore be set so low that almost nobody who's going to be a provider of these services are actually going to be able to make a very good profit. At least they won't be able to make an abnormal profit. And an abnormal profit is a rate of return that exceeds the cost of capital. So essentially, if this is true, the providers of these services and infrastructure will essentially be able to earn their cost of capital. They'll be able to make a profit, but not one that's very exciting. Now, in response to this development, there's some people that have been putting out some conspiracy theories to try to discredit the achievements of this Chinese firm. Now, we're just going to have to wait and see how this actually pans out. But based on my initial assessment of these developments, it really does look like this is a revolutionary development within the AI space. Now, for a long time in my own service, I've been telling the investors in my service that software would become a commodity, that anything that's software oriented, precisely because of the nature of AI, would really become commoditized, and it would be very difficult for any sort of software providers to be able to actually earn abnormal profits. Now, there was another aspect of this, which is kind of more the hardware element, the infrastructure element. And there, I do think that because of the economies of scale possessed by some of the big tech companies, that there could be some profitability. But this is essentially kind of an industrial type of a profitability that we're talking about. These are industrial type businesses, these big data centers and so forth, that sort of serve as the backbone of the infrastructure. Now, apparently one of the bottlenecks in the whole AI system was the processing chips that were required to do the processing on these increasingly complex models. The problem is that for a while now, engineers have been pointing out that they've been developing systems that were essentially being able to circumnavigate or essentially avoid having to use the expensive NVIDIA chips. So what this means is that in order to create extremely powerful AI models, all you need is sort of more cheaper commodity type of chips. Now, also what this means in terms of the infrastructure is if these models are so much more efficient than what had previously existed and what had been projected, that means that also there's just going to be a lot less processing and a whole lot less electricity consumption as a result of the processing. One of the big theses that has been going around is that with the explosion of AI, there was going to be all this pressure on the physical infrastructure and on the energy required to kind of fuel the AI revolution. But essentially what this is going to do is going to really lower these bottlenecks, these physical requirements to build out the AI infrastructure. It's going to make it a lot cheaper. It's going to make it such that it's going to be a lot harder for companies to actually profit from this in a big way. Now, what is going to be the effect of this on the markets? On the one hand, I kind of get the sense that markets may be a little bit slow to digest these developments. I think there's going to be a lot of resistance to believing that technology that US companies spent hundreds of billions of dollars on can be easily replicated for, very low amounts, less than $100 million. And I think it's going to take a while for people to give up on these ideas that have been building up over the last couple of years, that we're going to have this huge build out of AI infrastructure. In fact, it was just a couple of days ago that this huge project was announced by OpenAI in conjunction with Google and others, that there was going to be this $500 billion investment in AI infrastructure in the United States. These developments announced by DeepSeek really are putting into question everything that everybody thought they knew about AI. Now, I think, as I said, I think it's going to take a while for people to process this, but I think that ultimately, at some point over the next few weeks, perhaps months, it's going to finally sink in that AI for the providers of AI large language models and infrastructure is going to become a commoditized business in which the players are not going to be able to make abnormal profits and therefore not be able to achieve high rates of growth. That doesn't mean that AI isn't going to be a revolution in our economy. It absolutely is. It's going to be absolutely revolutionary. This could be more revolutionary than the advent of the railroads or even the advent of computers. It's going to be something that's huge. The question is, who's going to be able to make money from this? And the answer to that is that it won't necessarily be the people that actually provide the actual AI software and that provide the infrastructure. It may very well be other players that are going to be indirectly benefiting from this technology. And I've been talking about this for quite a while in my service, and we've been targeting stocks and sectors and factors in our service which we believe are going to be indirect beneficiaries of the AI revolution. And so I think that what's going to happen is that we're going to have a huge decline in the valuations of a lot of tech companies, particularly the big tech companies whose valuations have been tied to some really fantastic stories about AI-generated growth and profitability. I think that the valuations of those stocks are going to become extremely compressed. We're going to have some big-time declines in those stocks. And I think that this is going to have an overall really depressing effect on the overall market. However, AI is still going to be a major revolution. And so what we need to look at is who are the various firms that exist currently in the market that are going to be able to, for example, benefit from the fact that there's going to be a lot lower costs in AI and that this revolution is going to be going on, but they're going to be providing a certain types of products and services that are actually do have a moat, that they will be able to grow quickly at high rates of profit because they are actually high barriers to entry in the types of goods and services that these particular providers are able to provide to their customers, leveraging these now lower cost, powerful AI models. So I really encourage all of you to do two things. The first thing is subscribe to this channel, because in this channel, I'm going to really be following this particular story very, very closely to inform you, because this is going to have really revolutionary effects on the economy and the markets. And I'm going to be following it closely, and you're going to want to be hearing from me here on this channel. And the other thing that I think that you should really consider at this point is subscribing to my service called Successful Portfolio Strategy on Seeking Alpha. On this service, I'm going to be navigating these issues very concretely in the portfolio, figuring out how investors can take advantage of this situation. In the first instance, I think there's going to be some downside volatility to take advantage of, but then there's going to be some huge long-term opportunities that we're going to be taking advantage of in this portfolio. And by the way, everything I'm talking about now is not new. Everybody who's a part of my service knows that it's been for at least a couple of years when the first AI models were released, where I was very adamant in pointing out that the developers of AI-related software were ultimately not going to be the winners in terms of profitability and growth, and that the real winners in this AI revolution, we're going to be some types of companies that people don't even associate with technology, don't even think about when you're thinking about AI. So I'm going to be talking about that on this channel, but more importantly, I'm going to be investing in those types of companies in our portfolio, particularly after we get some sort of a market correction here, which is unfortunately going to be bringing everything down with it, most likely. So thanks very much for joining, and we'll see you next time.